J-Blog, 6th of June 2010. Big headline: Recession fear overblown. In other words, don't worry about it. Go out there and spend some money. Things are going to get better. Well, I don't think things are going to get better. In fact, when I'm looking at Friday's action, specifically Friday's action, but this week's action, I'm thinking this ought to be it. Now, obviously, I don't know. It will depend on what the Bulls with their endless pockets can do again. But technically, this basically is your sell sign. This is your sign that the bull market has ended. I should call it the bull leg in the bear market. Because I am looking at, and I think again, the chart you have to look at is the New York Stock Exchange composite index here, and it has actually put in a definitive lower low now. So this last run up that we had here, in my mind, is now definitely blown. This little rally attempt failed. This little rally attempt failed. So we basically have a zigzag going down, and it's not pretty. OBV is signaling that this is a worsening trend. High volume on down days, low volume on up days. OBV is basically giving this both thumbs down. CMF, same thing. The RSI again is in a clear downtrend. This is about as ugly as it gets. And one very important thing to look at is what actually happened on Friday in detail. If we look at the one-day chart, this was a collapse in the beginning of the day, a tiny little rally, and then the entire day it went down. This wasn't an afternoon fade. This wasn't anything that had to do with fear or anything like that. This was just a steady downtrend. Nobody here was willing to buy anything. It's just a slow sell-off, and that is much more telling than if this had been a rise and then a late day drop. Um, so again, I would say definitely you don't want to be in this market. I am not in this market. I'm short this market, so I'm out of the market twice. Um, but going back to the to this, um, this is typical descending the slope of hope kind of headline. I always look at those headlines. They're just as important as the technicals. That, oh, it's not really that bad. Once they start talking about it's really horribly bad, then you know it's really bad. And then once they start talking about will this ever end, or this is never going to get better, or so on, that's when you know you've got the bottom. As long as there's hope out there, you don't have a bottom. So that's my take on what I saw on Friday. Friday was definitely ugly, no doubt about that. And even though the S&P has not made a new low, um, the New York composite definitely does. So for me, this is further confirmation of what I expected. We'll see, but the current administration seems to have absolutely no problem taking out trillions of dollars, writing that off against the next generation. Freddie May and Freddie Mac and Fannie Mae, sorry, um, are almost $1 trillion in the hole now. The U.S. government is now guaranteeing almost all the mortgages out there, and with endless amounts of money being spent. Of course, this is the equivalent of having somebody on life support and continuously uh, putting new blood into their veins. Obviously, that cannot work forever, but that's what they're doing right now. They're indebting the American public, future taxpayers, for trillions of dollars. Um, United States really isn't that far off of Greece. It is in slightly better shape than the UK and in slightly better shape than Japan, but that isn't saying a lot. This case is definitely terminal, and that it makes me very sad personally. Very sad how a nation can just spend so much money, um, and the voter just does not care. It baffles me how the voter can allow the country to be destroyed like this, and with it potentially capitalism, because this can very much lead to revolutions, a disbelief in a collapse of the entire system, and a replacement of with some sort of a totalitarian system. Um, and perhaps that is the plan, I don't know, but the fact of the matter is what is being done right now is insane, um, and it can lead to nowhere but tears because it has in the past so often. So I consider this crazy. I'm just shaking my head. I don't get it, and I don't get how the common person on the street is putting up with it. But as we're traders and not not politicians, we have to figure out how to make money in this. So, you know, I'm short. I've been short for a long time. SPG, that's one of mine, where I went short right up here. This is largest owner of shopping malls. Shopping malls will, of course, are connected to the consumer. The consumer is basically broke. Here's the consumer discretionary. It had a run up that again was for me was not understandable why this would happen. But that uptrend in the consumer discretionaries is definitely broken. It no longer is in the channel where it was before. Looking at financials, financials are basically back to the beginning of the year. The inverse stocks like SKF and FAZ are doing quite well these days. Real estate, here's an inverse real estate that is doing better. Now, these kinds of stocks, SKF, FAZ, SRS, they have a tendency to move exponentially. They start moving very fast when the market starts moving very fast. Right now, there isn't a lot of action. I'm a little bit disappointed with the way that the inverse funds have been performing, simply because when you look on the inside of them, they're basically just the inverse of the bull funds, um, and that is not really a reverse fund. The reverse fund is the kind that, like Goldman Sachs designed, where you actually pick the companies that are most likely to fail, the ones that are totally overvalued, the ones that really should drop, and you actually assemble an ETF from those companies that are most likely to fail and you short those. That would be a true inverse bear fund. What this is basically your strongest and your most resilient of the banking and financial stocks and selling those short. That really isn't a smart thing to do, which is why this thing has not been performing as well as it should. Um, in the future, I hope that somebody comes up with some better uh, bear ETFs rather than just um, shorting bull ETFs. There's got to be something better out there. What else do we have? Apple, of course, says that it has sold 2 million iPads. Again, great device. Love it. Would I buy one? No. Too expensive for what it does. It's a toy. I don't understand where people get the money to buy this stuff. But Apple stock has definitely been rewarded for this. Has not taken part in the strong drop, but even it is showing weakness. And as Jesse Livermore said in his book, his famous book, that even the strong stocks will be dropping, and strong stocks in a bear market are then replaced by weaker stocks that become the darling. Uh, Again, it's a great book to read. His memoirs of a stock operator. Anyways, that's all I have for this week because I'm out of time. Good luck next week. Make lots of money and well, I'm short. I don't know where you are, but I continue being short and happy. Bye.